Hello, my name is Heather Dessette, and I am NetElixir's Event Marketing Manager. Welcome to NetElixir's Pre-Holiday Consumer Trends and Retail Data Insights-Packed webinar. As our audience is aware, NetElixir helps retail brands find and engage high-value customers and acquire game-changing insights. We are proud to be premier partners with UPS, Google, Bing, and Facebook. To the left, you'll see a list of our digital marketing solutions, and below is a list of some of our clients that we have the privilege of working with. As you can see, our retailers range anywhere from food to fashion. To kick off this insights-packed webinar, I would like to introduce you to NetElixir's founder and CEO, Udayan Bose. Udayan will share with you the latest retail data and retail trends that may have an impact on your 2020 holiday season. Udayan, over to you.
Thank you very much, Heather. Thanks everyone for joining. I know just before the holiday season, a Friday at 1 o'clock, it may not be the best time, but we decided to sort of do this webinar primarily because many of you who have been attending all of our retail e-commerce and online shopper webinars since March 11th, when we did the first one, really expressed a lot of interest in terms of fresh data. So this webinar is jam-packed with data, and I would love to take any questions that you may have at the end of this webinar. As many of you I know have been sort of a part of previous webinars as well, but still I'll just go ahead and just do the research overview. And I really wish, as I was creating this webinar, that I didn't have to put this slide, but the unfortunate part is the outbreak, I think, really sort of continues. And it has been a massive human tragedy. And it has really affected hundreds of thousands of people. I mean, we just can hope and pray that they improve, the conditions really improve quickly. We have been trying to track from our first webinar that we did on March 11th, the impact that this pandemic has been having on the e-commerce, specifically on the retail e-commerce industry, and with a very clear focus on the United States. The data that I'm going to be sort of sharing with you is fairly recent. I mean, we have it's basically between the 9th of Feb when we started collecting the data, all the way till September 19th, which is less than a week back. So it's probably as fresh of a data as you may sort of get anywhere. We continue to really sort of continue with this tracking, and we have been publishing regular blog posts, sharing this information. So those of you who may not really have been subscribed to our blogs yet, it's netelixir.com/blog. You will see a lot of insights, a lot of data right out there. And again, my request would be any questions that you may have. This is going to be the last prior to the holiday webinar that we would do, trying to correlate the impact of COVID-19 on the impact that it has had on e-commerce sales as well as online shopper behavior. So any questions that you may have, please feel free to add it to the Q&A box or the chat box. Some of the questions I'll just probably just to almost like provoke you into asking questions. These are the questions which our clients, we work currently with around 100 customers. All of them are retailers, retail e-commerce companies in the US. They have been asking us these questions. The first and foremost, which is there on top of the mind for all the businesses, is will this outbreak really lead to permanent shifts in consumer behavior? The second question, will the new customers really continue to shop online after the pandemic is over, or will they go back to only shopping from the traditional brick and mortar stores? How should I as a marketer really calculate the return on marketing investment when I'm not really sure as to what would be the lifetime value of the new customer? So can you tell me a little bit more about the new customer and some of the buying trends, some of the behaviors that she exhibits? Are the existing set of marketing KPIs even relevant? A very important question, because understandably, when measuring lifetime value is not as easy, the KPIs itself really go for a toss. And finally, I think, how do we prepare for this holiday season when there is so much uncertainty? Well, over the last about 2-3 months, these questions are the most commonly asked questions by a lot of retail e-commerce companies. And we will try to address some of these. I don't think anyone really at this point in time really has an answer to many of these questions, which are pretty broad, including the first one. So moving on in terms of the research overview, as I mentioned that we started this research phase on the 9th of Feb. This was right just before the pandemic was really sort of just starting. And we have been tracking and analyzing this data in chunks of about 2 weeks or 14-day periods. We have done it with 7 retail categories. And we essentially compared the daily data 2020 to 2019 over this, I'm sorry, 16 time periods, basically between 9th of Feb until 19th of September. The retail categories that we have considered for our research include apparel, home decor, tools and hardware, food, gifting, pet supplies, and home furnishings. And I should be able to share with you very specific data on each one of these segments. For analyzing, I mean, this wouldn't have been possible had we not really had our own technology platform, which has the capability of analyzing online shopper behaviors by tracking the real-time consumer journey called NetElixir Insights. So that has been really helpful. And I know the NetElixir Insights team is joining us today as well. So a big thank you to you guys for really sort of constantly research and analyzing and sharing this data, as well as the research team, the NetElixir Retail Intelligence Lab team as well. So with that, let me dive into the numbers and the data first. But before we, the presentation of the data insights is pretty much three parts. The first part is where I'll try to share with you the actual data on e-commerce sales and the online shopper behavior, some of the key trends. One of my requests would be, as you get into the holiday season planning, I think it's fairly well acknowledged that this would be the most unpredictable holiday season ever. So hopefully some of these data pieces really helps you to ask those questions and really think about things, think about your plan that you are going to have to activate very shortly as the holiday season, the holiday season shopping really starts. So again, I would request any questions that you may have, please feel free to add it to the Q&A box. I'll start with this rather interesting graphic, which came out last month. And it was done by Bank of America, Forrester, McKinsey, US Department of Commerce. A lot of companies really collaborated. And they came up with this very interesting graph where they showed that 10 years of e-commerce growth really had happened in 3 months. 10 years worth of e-commerce growth, as you can see, 16% growing to as 33%, happened in a span of 3 months. That was like absolutely abnormal. Now, the fundamental question in many people's mind is this 33% going to stay, or is it going to again go back to 16%? So hopefully some of the data that we are going to share over the next few slides helps you understand that we are never ever going to sort of get back to 16%. At this point in time, the percentage is close to about 22% already. It has fallen, of course, from 33% as this graph shows and so on. But let me sort of dive into the category level thing. So online sales, they continue to grow at an explosive pace across categories. And as you have seen, I mean, I've really removed the Feb because 8th of March onwards was when the pandemic really started at it really sort of exploded, and it was just huge. So we have really broken the different segments: apparel, food, gifting, home furnishings, home decor, pet supplies, and hardware. Apparel started slow. It changed somewhere in the mid of April. And we have been able to exactly correlate with when people started getting their stimulus checks. So stimulus checks normally across the US were received between 13th of April and the 20th of April. And as you can see, many people sort of started investing to sort of buy clothes. Also at this point in time, I think people were sort of slowly getting into the spring. Some of the lockdowns were slowly getting called off. So the timing was perfect. And we believe that perfect timing with which the stimulus check as well as the onset of spring really led apparel to move from a -4% year on year all the way to 17% plus year on year. And as you can see, more or less, it has been consistently growing. In fact, the most recent 2-week period, it has grown by about 57%. So it has been a fairly steady growth. So that's, I think, the state of apparel. If you really go to food, I think everyone knows that food segment really underwent some tremendous spikes. If you really look at 8th of March, all the way to 13th of June, it was that 3 or 3.5 month period where food touched even 590% growth year on year. So it was a huge growth that has come down substantially, as you can see with the numbers since then, but it still holds pretty consistent anywhere between 28 to 45%. So I would probably sort of put it about 35 to 40% is what we see an ongoing sort of an overall year-on-year increase in food be as such. Gifting again was a bit of a surprise initially because after a slow start, it sort of started going up around 22nd of March. We spotted a very unique trend and a very happy trend where there was a lot of outpouring of compassion. So A lot of the Gen Zs and millennials essentially were sending out gifts to their parents, to their grandparents, and that really sort of led to a big spike. And one of our previous webinars that I had done, I believe in the month of May, very specifically called out the impact that the millennials and the Gen Zs were having on the gifting segment, just because they were sending a lot of gifts to their parents and the grandparents. So that, I think, was a very unique trend that we had observed. Home furnishings has been on an explosive growth track. As you can see, consistently between 19th of April, almost until very recently, around the 22nd of August, and it still continues, it has been consistently higher than 85, 90, 100% in many cases. Same applies for home decor as well. Not as quick, but home decor still has been consistently anywhere between 25 to 40, 50%. And there were certain times where like 100% plus. So overall, across the industries, the pace of growth has been quite explosive, and that really continues. Now, there are a couple of things I really wanted to sort of call out. One is, we can't really say that people have not been able to adapt and adjust to the new normal. So we can probably overrule the factor that is it being driven because of a panic buying thing. So the panic buying probably ended somewhere around the first week of May. So that can be a cutoff line. After that, people settled in, they adjusted to the so-called the new normal, the new unfortunate normal. And so we believe, or we have, at least based on this data, a substantial amount of context to believe that this 40 to 50% growth will continue for the remainder of the year as well, which again speaks volumes as to how quickly is the retail sales really shifting from physical retail to the online retail as well. Again, happy to answer any questions. I know we have a lot of our analyst friends join us today. So any questions that you may have, I know I'm seeing all those chats, I'll probably take it at the end of the presentation. This was an analysis we started doing fairly early on. This is directly pulled from the government data on retail sales. What this particular table aspires to convey is the explosive increase of e-commerce. So as you can see, this year-on-year increase of e-commerce, I mean, it's defined as the particular line in that report, the government report, as total electronic shopping and mail order houses. So that part is about 27% to 28%, went up to 35% in June, year-on-year growth. But e-commerce as a percentage of total retail sales is the last row, where you can see it went up from 15% in Jan, 14% in Feb, all the way to 22% in August. We have a very strong, based on this, we feel very strongly that this 22% plus trend would continue. And getting into the holiday season, where I mean, we believe that this would actually sort of go up even further. This was an interesting graph which was published in the eMarketer a few months back. They made a pretty big statement, and this is something very, very interesting. 7.4 million new digital buyers or online shoppers would be added in 2020. Many of that millions have already been added, and many of them would be added again in the remainder 3 months. So, but that was a very interesting thing, shows as to how big of a shift is going on. I mean, so we tried to really go a little deep and understand as to, specifically for a couple of our segments, home furnishings and hardware and tools, where exactly are these new online shoppers coming from? What regions are these new online shoppers coming from? So we did a bit of analysis, and this is purely our data, for home furnishings and hardware and tools. And let me explain you the graph. So each one of these pies, we have tried to split all the new shoppers which have been acquired over the last 6-7 months by region. So you see South, Northeast, Midwest, and West. As you can see, South for both hardware and tools, as well as home furnishings, really dominates with 34%. So that means that out of 100 new shoppers, which were acquired in the home furnishings industry since the pandemic began, 34 of them essentially came from South. So we saw the biggest shift from basically people embracing online, essentially in the South of 34%, followed in home furnishings by West 24%. But as you can see, there was a big gap, right? 34 to 24%. Now, again, there is a case to be made that in West, the overall online or the e-commerce penetration or the e-commerce shopper penetration was higher as well. So South had comparatively a slightly lower base than West, or let us say Northeast. But still, it was a fascinating to see as to where the new online shoppers are coming from. Hardware and tools, as you can see as well, we had this split again. West is number 2, Midwest is 3, and Northeast is 4. The reason this chart is interesting, because as you are really creating a plan for the holiday season, I'm pretty sure you would really be able to, I mean, obviously have already analyzed your current customer base. You probably know as to where do they live, right? And you may have some very customized marketing promotions or plans targeting customers in South, targeting Northeast, and so on. So it's worthwhile to keep these pieces of data in mind, because this is an aggregate industry data. Of course, it's basically based on our data set, which may not be the all-encompassing exhaustive data set, but it has quite a few number of customers, which gives you a good indication as well. So can help you in planning out your 4 Ps of marketing mix quite substantially. I have got the questions. I'll probably take just one of them and then probably move on. So essentially sort of moving on to the next slide. And this one was interesting as well, to an extent obvious probably, that mobile is driving more sales than ever before. And 43% when we really calculated the year till date numbers, so Jan to mid-September 2019 versus Jan to mid-September 2020, 48% of all the e-commerce sales or online orders really were driven by the mobile devices or mobile phones, let us say. That has gone up by 5%. Now 5% in the overall scheme of things is a massive shift, I can tell you, massive shift. So that's, I think, one of the things to just keep in mind. There has been a big shift. I know that I still cringe to see many of the e-commerce companies or retailers still don't really have a mobile site, essentially. So my request is please go ahead and really focus on getting the mobile site right, because I mean, during the holiday season, we forecast that one half of all the e-commerce sales will really happen or be driven by mobile devices. I wanted to also track in, since we manage a substantial amount of Google ad investments for many of our clients, or almost all of our retailer clients. I wanted to share some aggregated data as well. The idea is to get some indication, right? The initial part told you a little bit about the online shopper, which hopefully helps you to conduct your holiday plan accordingly, and maybe hopefully keep some of these things in mind. But this ad investment gives you an understanding as to where currently the cost per clicks are, what is the opportunity or not as much of an opportunity. And based on the experience and based on the trends we have seen, what do we believe will marketers continue to invest during the holiday season? So let me move on to a specific slide. So these are the Google cost per click trends, Google Ads cost per click. So Google Ads or AdWords as it used to be called earlier. So we have tried to do it by industry or category. So tools and hardware, the cost per click, believe it or not, and this is recent data. This is essentially, I have taken the most recent data in the month of September and really sort of taken the March to September timeframe, because that was the impact. The cost per clicks is substantially down across categories still. I was quite surprised to see that the cost per clicks year on year, 2020 versus 2019 still happens to be almost minus 45% lower compared to what it was last year when it comes to the food and the gourmet industry. This really provides a very, very, very powerful and a unique opportunity for a lot of businesses to really invest without really having any negative impact on the marketing return on investment. Because your dollar can be stretched a lot more because the conversion rates are higher as well. And this is the time for you as the marketer to really invest. Of course, we are not saying that you really in any way sacrifice the return on investment. The return on investment, even if you peg it at 10% higher compared to what you would really like to have, that's fine. But then keep spending. This is the time for you to gain market share. And this is probably one chart which really proves that particular point or case. This is our overall estimate, actually, in terms of the Google ad investment. Now, we have tried to segment it by the overall customer size. So the small e-commerce businesses, they got off to a pretty strong start in terms of investment. They were able to take a lot of opportunity, but purely coming into the fourth quarter, I think with substantial amount of headwinds and a lot of uncertainty, we see this segment spend obviously more compared to last year in Q4, but 5 to 7% more. So we are a little muted in terms of projecting their spend increase compared to Q4 2019. Mid-sized e-commerce businesses, which is, we have taken, just to clarify the mid-sized part, companies between about $25 million all the way to $500 million. It's a pretty big range. That they are spending a lot. And we expect them to increase their spends, again, Google Ad spends by 25 to 28% in the fourth quarter. And enterprise e-commerce businesses, we have been quite pleasantly surprised that they are really sort of ramping up the spend quite substantially. Probably to recognize the fact that a significant part of the business that they are expecting to happen in Q4 would happen online. They have shifted a substantial amount of spend from offline to online. So if you really do a weighted average and aggregate, again, this is purely our number, we are projecting a 22% to a 23% lift in the Google ad spend in the fourth quarter. So I know we have many of our analyst friends join this presentation today, and I'm sort of speaking to the Susquehanna Investment Group analyst as well later today as well. But that would be our projection essentially for the fourth quarter. So we remain very bullish in terms of businesses really substantially increasing their Google Ads investment in Q4. Moving on, I have just tried to create one quick sheet, what to expect based on some of the trends that we have been researching on and seeing. The first one, I would think has a bit of a mix of optimism, I think, but I would probably say that 23 to 25% of all the retail sales in Q4 will happen online. Now, if you really compare to last holiday season, Q4 2019, that's a massive shift. 16% going to 25% is a massive shift which is going to happen. In terms of overall retail sales, we do not have substantial data, but if you really do see the trends that are there, specifically analyzing those customers or retail customers of us who really have a physical presence as well as an online presence, we are seeing the overall, the offline store sales being slightly lower compared to last year. And we believe that trend would continue even in Q4. How much, we probably would not be best qualified to really answer that question, but we feel that overall the entire holiday retail sales in Q4, 25%, 23 to 25% will really come from e-commerce sales. The incremental e-commerce sales projection, and again, if you really extend that 25% number, 23 to 25% number, that amounts to an incremental $50 billion to $80 billion of retail sales really happening online. Substantial number, understandably. Holiday shopping, we believe still will start as early as October first week. Now, initially it was substantially driven by the possibility of Prime Day happening also around the 5th of October. But recently there are some murmurs that Prime Day may actually sort of happen on 13th, 14th October. We don't know what will happen. But there are certain other factors which we believe will play an important role. The first one, most importantly, is a lot of the consumers are used to some shipping delays over the last about 6 odd months now, right? So if I ordered something and expected that to come, let us say pre-pandemic times in about 2 days, I have seen that it may take as much as probably about 15 to 20 days as well. So the overall expectation of receiving the order that you have done has really been recalibrated. And we believe that that would be one of the key drivers, that we don't really want to miss out whatever we have ordered to reach us on time, or the gifting items reaching us on time. And hence, we believe that online shoppers would start the online shopping as early around the 5th or 6th of October still. Stockouts, we believe, will pose the biggest challenge this holiday season. We have been talking to our customers. Many of them, they have really been hit. They continue to being hit, specifically in their manufacturing units because of the pandemic. And we believe that that imbalance which has been caused, unfortunately, continues. The second thing is, because of the unpredictability of demand, I think what essentially would be purchased at what time, there is a little bit of an unpredictability around that, which would really lead to stockouts of certain items, as well as probably an extra inventory on certain items as well, which we believe, based on the trends that we have seen, may be the biggest challenge this holiday season. There is a possibility, and I'm just making a very strong, powerful, bold statement here, I know that. There is a possibility that instead of Cyber 5, which is like Thanksgiving to Cyber Monday, there may be a possibility that we have Cyber 10 this year. And the big reason is, Actually, I'll go on to the next one, the sales promotion part. Just because the demand has been built up, and when we're talking about 50 to 80 billion dollars incremental demand, that probably is an indication of how big of a demand is there. We believe that the sales promotion will not be as attractive this year. We had Ajit Sivdasan, the global head of online sales for Lenovo, join us about 2 weeks back, and he mentioned that as well. The sales promotion will not be as attractive, primarily because I think the overall, it's really a demand supply factor. And what more and more businesses are doing, just being visible across, so that they are able to gain market share. So that's the strategy that we are seeing very clearly. And that probably is one of the big reasons why we believe that there may be a possibility that instead of Cyber 5, many businesses may want to spread it out on a Cyber 10. It can be Cyber 5 and then another Cyber 5, or it can be sort of 10 days of holidays. It can be probably one of these things. Just that's probably at best maybe an estimate. There is no logical explanation behind that, but that's something which is a possibility that we believe given the trends that we have seen. The next one also is a very bold statement. We believe over 5% of all holiday online revenue will be driven by new online shoppers, those who had not purchased anything online prior to the pandemic. So that is our overall measure. That the first question which I asked in one of the initial slides was, is this shift permanent or is it temporary? We believe that it has been permanent enough that 5% of all the online holiday sales this holiday season would be driven by new to online shoppers only. Enterprise and large businesses will be increasing their digital marketing spend by upwards of 20%. We have already discussed as to what is the range, anywhere between 17 or 18 to 20%. Amazon's share, we believe, will increase from 43%. Again, this is basically, we have been tracking this for the last about 10 years now. Now, 43% is based on the data that we had collected last year, and that's what we have presented during our holiday webinar last year. We believe that this will grow to 45% this holiday season. And the biggest driver would be predictable and faster shipping by Amazon. Buy online, pick up in store will be a very important driver of e-commerce sales after December 10th. Just because of the online shipping challenges that we forecast and foresee, we don't believe that there would be too much of an online post December 10th, just because the stuff that you have ordered may not really reach you on time. But that is where I think the traditional brick and mortar companies, or who have a physical presence, will really use BOPIS or buy online, pick up in stores. And we believe just if BOPIS was a P&L line item, the revenue would essentially increase by as much as 50% or more, just because of this last minute push this holiday season. Again, I mean, I am happy to answer any questions that you may have. These are predictions. As I mentioned, that during a holiday season, which is as unpredictable, and this one, I mean, it's basically anyone's guess, but based on the data that we have been able to see, we are just trying to connect the dots and see as to what are some of the trends. And these are the 10 trends that I really wanted to present. So having said that, NetNet, I really wanted to, before I hand it over to Heather, end with this slide. We have been making this prediction since 2008. We have been fairly on the ball for many years, I think, in terms of accuracy, in terms of growth. We believe, based on the numbers that we have seen so far, in Q4 would experience a 22% year-on-year e-commerce growth. I know there are different numbers. I mean, I believe eMarketer has come out with 18% or 18.4%. ComScore hasn't really come out yet. But based on, again, our data set is limited to about 100 customers. We believe that the overall year-on-year e-commerce growth would be 22% this year. So with that, let me hand it over to Heather, but thank you. Yeah.
All right, thank you, Udayan. I'm excited to announce a new initiative that NetElixir is kicking off on Tuesday, September 29th, which is next Tuesday. NetElixir's holiday experts have been listening, and we know that some of you may be overwhelmed with what this holiday may have in store. That is why NetElixir compiled your questions and challenges into our new Connecting the Dots video series. Every Tuesday until December 15th, we'll be releasing 5-minute short and digestible videos that will answer your retailers' biggest questions and challenges this holiday season. This video series aims to get retailers ready by providing them with the dots of information useful to adjust in their robust holiday strategy and create a new venture moving forward. Your questions will be answered by our holiday experts and will be backed by the latest e-commerce trends and online shopping behavior, providing you with the real-time data and insights you'll need to get through this holiday. So I encourage you to follow NetElixir on YouTube, and also to check out netelixir.com/university udayan.com/consumer-insights to receive the latest holiday insights and to also receive the recordings for our videos. All right, and on the next slide, we're going to move on to some questions. So Udayan, the first question we received is from Randall. Randall would like to know, what are the top 3 things retailers are seeing most retailers worried about during the holiday season?
That's a pretty, thank you for, first of all, Randall, for the question. That's a pretty powerful question. I mean, what I can sort of share with you as to what the retailers are asking and what they seem to be most concerned about. The first one, interestingly, is the unpredictability in demand. Effectively, though a lot of data modeling has been done, but I think that planning the stocks so as to be able to meet the demand, I think, is the number one challenge and something that businesses are concerned about. The second thing which businesses are concerned about also are the shipping challenges as well, because based on the overall increase in demand, I think there would be some strain potentially on the entire shipping system. As you know, we sort of are a CTP partner for UPS. So we have had some leading executives from UPS join us on prior sessions as well. But I think there will be some imbalance with some overall supply chain shocks, which may be a little difficult to forecast or estimate at this point in time accurately. Third and finally, I think it's just the question of, I think there are just so many headwinds that it's really difficult to predict this thing, because once the pandemic, there is a lot of conversation. Will we actually see a second wave? God knows, we don't want to see a second wave, but that's a possibility. To compound this, there is a lot of economic challenges which is going on, so we really have to be sensitive to that as well. And there obviously are a lot of geopolitical things as well. For example, this is being an election year would have an impact also. So just a number of things and variables which, honestly speaking, individual retailers may not really have any control on, is something which obviously is a bit of a concern. So those are the top 3, I would think, Heather. I see that we are getting some questions here. Okay. Mm-hmm.
Yeah. We received a question from Chris. Chris would like to know, what is the expected cost per click trend changes for Q4?
Cost per click trends, we believe, Chris, I think at this point in time, as I mentioned, currently still there is a big gap, right? If you really take that across the industries, almost like a 22% cheaper is what the Google Ads clicks are. We believe that this will actually go up, and we will see this go up from the first or the second week of October. The clicks will start becoming more expensive. So you probably have a 2-week, at least a 3-week window. We believe that it will have the same at par level somewhere around the first week of October. And after that, if you really look at the entire Q4, we believe it can sort of go up as much and on an average anywhere between 10 to 12% higher compared to Q4 of 2019.
Okay. And our final question is from Lisa. Lisa would like to know, how will this holiday season be different than past years?
Oh, wow. I mean, past year was a lot more predictable, Lisa. So, I mean, that's my one thing. I mean, we could predict, we could really plan for it. But unfortunately, this one, I mean, you can plan, obviously, and you have to plan because you can't really sort of go into this blind. But the struggle is, I mean, you really have to be flexible and adaptable and very nimble. Because whatever plan that you may have, you really need to change that. So you really need to have a plan B and a plan C. So in prior holiday seasons, normally you have a plan A and a plan B, but you don't really need to make a plan C. But this one, I think you'll have to make a plan C. The second thing, which I think is obviously a concern for everyone, is what are some of those big players really sort of moving? Because some of the market makers like Amazon and so on, what are some of the things that they are doing? Because as we have seen that whatever Amazon does, it basically makes the market, it sort of moves the market. So really closely listening to those trends and trying to anticipate and really sort of move towards that, I think is a key component also as well. So I think that would be my, I don't know, pretty long answer to your very interesting question, but thanks, Lisa.
Okay, perfect. Well, thank you everyone for joining us today. We really appreciate hosting you. And if you have any holiday challenges, please visit our website or submit them through the survey that's going to appear on your screen. Take care and have a great weekend.
But thank you very much, everyone. Happy holidays to all of you in advance. Thank you.